we're talking about the big three. We always talk about Moody's, don't we? Standard & Poor's, Fitch as well. Now, they rate both companies and countries on the viability of their finances to help investors, really. And they received a lot of criticism in the past. You remember, particularly running up to the financial crisis in 2008, over the fact that they failed to foresee that. But they're not the only three. There are others as well out there. And in fact, there's a new entrant in the European market that has Chinese origins. It's called Dagong Europe, and it's recently received clearance from the European Securities and Markets Authority, also known as ESMA, to start operations. Well, we're joined here in the studio by Marco Cecchi de Rossi from Dagong Europe. Thanks very much for joining us here. First of all, I wanted to ask you, how is your approach to all of this different to other ratings agencies, particularly when a lot of your staff come from those big three?
Yes, the origin of the staff is not so important in credit rating as in actually is the point of view you try to express and the staff tries to express. And the difference of Dagong Europe is, for Dagong Europe, is that it will try and represent the point of view of the Chinese investors community, which since a few years now are the largest net asset holders in the world. And they have no voice in the credit rating industry until now.
And you're rating just for companies, aren't you? Why not countries as well?
We think the most added value we can provide to market in this particular sector is in the corporate sector, because there are already many sovereign rating providers, very controversial ones sometimes. We think, by the way, that the investors community in China is going to move gradually from sovereign risk to corporate risk. And that's where we want to stay.
Now, this is the first time that the Dagong name, if you like, has emerged out of China. You were founded, the company there was founded about 20 years ago. How are you going to convince investors and companies as well here in Europe that your approach is completely independent?
Well, it's a daunting task. I think the only way is in two ways, if I can say so. Quality of ratings, it means the research supporting the credit rating, not just the label. And secondly, a fresh view, a different point of view embedded into this research. This is the only way where a newcomer in this highly concentrated industry can, be received well by market participants, especially investors.
And what's the reaction been like so far to your arrival?
Challenging, I would say. We have been having in the last 4 months about 120 meetings within Europe, and the expectation is very high. Hence, our challenge is very high as well, because we have to deliver to these expectations.
Okay, and one last question for you: what's your ambition here? What's the target you'd like to reach here in Europe? What are you aiming for?
Well, in terms of coverage, we will strive to get the highest possible coverage of issuance, especially issuance which wants to find its way into Chinese investors community. So we are not looking at large numbers, maybe 60, 70 rating in 3-4 years' time, but very significant ones.
Okay, well, Marco Cecchi de Rossi from Dagong Europe, thanks very much for joining us here in the studio today.
Thanks very much. Now, Matthew's going to stay with us because we've got an update, of course, on the markets.
Yes, let's take a look at those. They've been open for about 15 minutes here in Europe. We can see that most of the markets, the main ones that we look at anyway, are dropping back slightly. The DAX there in Frankfurt down about 0.5%. One bit of news on the unemployment situation in Spain that I can give you an update on. The unemployment rate for the last quarter, the April to June period, is just out. Now, that rate is, as you know, very, very high, but it's actually fallen back for this most recent quarter for the first time in 2 years, 26.26%, still 1 in 4, but an encouraging sign perhaps on the Spanish unemployment situation. Let's just take a look at Asia as well and how the trading day wrapped up there. And then it's a similar tale to what we're seeing here in Europe. All the main markets down, particularly the Nikkei off by over 1%, Shanghai Composite down about 0.3%.
And let's stay in China. Worries about the economy prompting some action from the government there.
Yes, that's right. Now, not the scale of what we saw back in 2008 when they launched this massive fiscal stimulus program, but some more targeted measures, perhaps a sign that there's more to come. I'll take you through what those main measures are. The first is helping small businesses, and they're going to do that with scrapping some taxes, such as VAT, for example. Also, cutting red tape, they promise, cutting fees as well from exporters. And the final one is boosting the railway network, which has already been growing really quickly, by helping to increase the ways that can be financed, development of railways there.
Good stuff. A Chinese-related business bulletin there from Matthew. Thanks very much. Now it's time for the papers.